SOX Compliance. SOX Compliance is the act of adhering to the financial reporting, information security, and auditing requirements of the Sarbanes-Oxley SOX Act. SOX Compliance ensures that organizations follow the requirements of the Sarbanes-Oxley Act to improve financial transparency, establish internal controls, and prevent fraud. It applies primarily to publicly traded companies, their executives, and auditors. Some important sections. First, Section 404, Internal Controls over Financial Reporting. Purpose. This section requires publicly traded companies to establish and maintain internal controls to ensure accurate financial reporting. Requirement. Companies must assess the effectiveness of their internal controls annually and have an independent audit of these controls. Impact. The auditor must report on the effectiveness of the company's internal controls, ensuring that they are functioning as intended to prevent fraud or errors in financial reporting. Second, Section 302, Corporate Responsibility for Financial Reports. Purpose. This section holds the CEO and CFO accountable for the accuracy and completeness of financial reports. Requirement. Top executives must certify the accuracy of the company's financial statements and internal controls, ensuring that the financial statements are free from material misstatement. Impact. Executives face personal liability for falsified or misleading financial statements, promoting accountability. 3. Section 404B, External Auditor's Role. Purpose. This section mandates that external auditors audit and report on the company's internal controls over financial reporting. Requirement. Publicly traded companies must have their internal controls examined by an independent auditor in addition to financial audits. Impact. Provides an additional layer of assurance that internal controls are effective and financial statements are accurate. 4. Section 409, Real-Time Disclosures. Purpose. Ensures that companies disclose material changes in their financial conditions or operations on a timely basis. Requirement. Companies must disclose any significant financial or operational changes to the public in real time. Impact. Promotes transparency and allows investors to make informed decisions based on up-to-date information. Section 802, Criminal Penalties for Altering Documents. Purpose. Establishes criminal penalties for knowingly altering or destroying documents to obstruct investigations or audits. Requirement. Individuals who knowingly destroy, alter, or falsify records with the intent to mislead auditors or regulators can face severe criminal penalties, including imprisonment. Impact. Encourages greater accountability for individuals handling corporate documents and records. Who enforces SOX compliance? The Public Company Accounting Oversight Board, PCAOB, and the Securities and Exchange Commission, SEC, enforce SOX compliance. Penalties for noncompliance with SOX. The severity of noncompliance penalties varies depending on the section infraction and is highest when information has been purposefully deleted, changed, or fabricated. They include fines of millions of dollars and jail terms for corporate officers, as well as the loss of directors' and officers' liability insurance, D&O, and exchange listing.